accounting class. I am Christy. Let's define accounting. Accounting is the art of recording, classifying, analyzing, summarizing book of record of business transaction of an entity. There are scope of accounting. When I mean scope, that means the arms of accounting. The arms of accounting. We have the financial management, we have the cost accounting, we have auditing, we have taxation, we have project accounting, fund accounting, social and environmental accounting, forensic accounting, taxation, performance management, sustainability accounting. Now, let's dive into cost accounting. What is cost? Before we go, what is cost? What is cost? Cost is the amount ascertained or incurred in producing a certain product or services of an entity in a unitary form. That is the process of measuring unit cost of a product or service is now what we call costing itself. It is what we call costing. Costing is the process of compiling and aggregating certain activities, finding out how much incurred to produce a given product or unit or service of an entity. The process of accumulating cost data. And here brings us to the definition of cost data. What are the cost data? Those are the initial cost. Those are the initial cost of an item. Those are the initial cost of an item. Before we know the initial cost of an item, that means we have to identify the type of cost before we can be able to say this is the costing or this is the price of this particular product. We have type of costs. We have direct costs and indirect costs. The indirect costs, they are the costs that cannot be traced to the production of particular product or service, and the direct costs are the costs that can be traced to the production of products. The direct costs are the purchase price of such products. The indirect can be classified or can be traced to the overheads, like the electricity, the rentage, and the marketing expenses, the legal fee on that product. Those are the indirect costs. There are functions of cost accounting. Why do we cost? Why do we account for cost? Why do we account for cost? Why? What are the reasons? The reason being that it helps the management, the users of the financial information, which is the cost accounting statement. It helps them to cost the particular product, to place price on it, to know how much it has cost them to produce such products, to know how much resources of the company the product has consumed before it can be able to come out as a product of such entity. And the number two is profitability analysis. In order for the users, that is the management, to be able to analyze the profits derived from such products. Budgeting. Budgeting. When we cost products, it helps the management to budget the expected expenses, to budget their revenues, to allocate resources. It helps them to allocate resources. Let's look at type of cost accounting method. Company make use of different type of costing method in order for them to arrive at the cost of units in which their product comes out. Number one is marginal costing. Number two is activities-based costing. And the third one is standard costing. When we talk about marginal costing, this looks only to the variable cost of an item. That is, the cost incurred in producing a certain number of products be different from others. Cost in producing like hundreds units is different from cost in producing 20,000 units of the products. So those are the variables. The variables is the difference between the units, the changes in the units produced by the company. So these are the marginal cost system. When you talk about activities-based costing, talking about activities-based costing, it is the assigning of overhead cost to the product or service of an organization or an entity based on the actual resources consumed by each product or services. When we talk about the overheads, they are the machine time, the purchase order, the inspection, the material cost, and the rest. So why calculating our costing, or when we want to use the method of activities-based costing to cost our products, which is the absorption cost, then we'll have variable cost minus fixed cost divided by unit products. That is when we get our total cost per unit. Total cost per unit. We'll solve little example concerning that in our subsequent lecture. When we talk about standard costing, which is the budgeting costing. This is estimated cost. Estimated cost. Just like that. The cost that is estimated to be spent in producing a particular product. These are the estimated costs. So, talking about cost center. Cost center are the aspects or departments in an entity that contributes to the production of products in a way that it will bring out the efficiency and effective quality in such products, such as the finance and accounts department, the human resources, the research and development, the customer support service. These departments are not directly contributing to the cost of our products, but indirectly they are bringing in they are bringing out the best in our products. They are not generating revenue directly, but the way they bring out profits in the production of an entity cannot be overemphasized. So without cost center in an entity, the production or service might not be satisfactorily made. So let's talk about cost pool. Cost pool, which is a term in cost accounting. Cost pool is a bucket that contains varieties of costs with specific activities. Varieties of costs with a specific activities. That means that activities bind the costs. It bind the various costs they share in that activities. Those costs they share in the activities, like electricity, like rentage. For an organization that produces more than one product, the electricity, the rentage cost will be spread over all the cost of producing all the different products. So in such case, we can say rentage is a cost pool for producing these products and that product because they both share in that activities. They both share in that activities.